team.
We're in start time. Do you want to start or do you want me to?
Okay. No, we can go ahead and go. All right, we'll go and get started. Unfortunately, having a little bit of technical difficulty with our other panelist that's online, and we'll work around it. Well, good morning, everybody. What we're here today for is to do real estate due to natural disasters. So the title is The Financial Economic Recovery of the Region After Natural Disasters, Resiliency of Real Estate Construction Sector, Case Study of Southeast Texas and Real Estate Properties. So there are four of us. There's Dr. Gabor Saksarian. He is an assistant professor of finance. We have sitting right next to him is Ricardo Colon, associate professor of accounting, previous chair of accounting. Online, we have Henry Venta, which was our long-serving dean for over a decade and a half. He is the professor of management. And I am James Sladen. I'm a professor of finance and a previous chair of economics and finance. So what we're going to do is we'll go ahead and start. Can you bring up the slide? It's not popped off.
I don't know what happened. It was up just a minute ago.
Second, while we get the slideshow to pop up here.
Fix this.
So what we'll do is Dean Venta will be speaking a little bit about a previous EDA grant that we just finished this last year and discussing that.
The mic's working.
I see it.
Can you share for in here the whole screen of the...
It's as big as it goes.
Okay. All right, well, we'll move on to slide 2 and have Dean Venta talk. So, like I said, a little bit of technical difficulty, so they might have to speak through the phone that'll come through here. So, Dr. Sarkis.
I think it's resolved now, right? You can hear me?
Yes, we can.
Yeah.
Okay.
Yeah.
So, good morning, and you can't call me Dean anymore, James. I know you are accustomed to that, but I haven't been Dean for several years now. So, anyway, it's nice to be with you, even though I'm not quite there. And my job here is to put things in context for you. Back in the fall of 2018, the university was fortunate to receive a grant from the U.S. Department of Commerce, the EDA, the Economic Development Agency, and it was about economic adjustment assistance for Hurricane Harvey grant. We generally refer to it as recovery and resiliency from Harvey. The original project was a 2-year project, but because of COVID, it ended up not finishing until August of last year of 2021. It was the budget for the 2-year period is $440,000 and change. There were 5 faculty members that were supported directly. 4 of them are the people that you see here today, and then a person that's not with us anymore. We also had a consultant that we involved, another faculty member, 8 students, 3 graduate students, 5 undergraduate students. And basically what the work did was examine 6 major economic sectors of Southeast Texas and see what effect Harvey had on them. Those sectors were oil and gas, education, real estate and construction, government, healthcare, and first responders. In the first summit of these that we had 2 years ago, we presented the results for the oil and gas sector, and others presented material about government and healthcare that was also used in our grant. Last year, we also talked about education, and you're here, presumably in a section, to talk about real estate and construction. So the important thing to think about here is that this grant allowed us to deploy lots of things. and set up mechanisms. And we now have I think because of what we began with this grant, the Center for Recovery and Resiliency at the university has really now been formed and goes forth from that. Later in the same session, you will hear another paper about a second grant that I'm only involved with as a co-PI, not as the PI, but that is the result of this. And together, this kind of work allows us to develop techniques that are not only used that will only be used in Southeast Texas, but across. We developed some techniques that are now sort of the way you analyze things. And you'll hear today about methodology called PARM, and with regard to real estate and construction that we have used in some of the other sectors. So it's an important sort of situation here about what can be done. So, okay, I think that's it for me. Georg, you're next.
Okay. Thank you, Dr. Venta. Very nice overview of the project and project goals and general outcomes that we achieved. What we will talk in this session, we will talk about real estate and also the economic recovery of Southeast Texas. So there are many studies and many researchers that confirmed that economic growth leads to development of real estate and construction, and it's kind of a circle. After growth of the economy that leads development of the cities and villages, it brings another growth, it triggers another wave of growth, and it continues. So we know about that, but we wanted to analyze and understand what happens during natural disasters, how the cities and real estate and construction react on distress, economic distress that happens after natural disasters. And what is the impact of Southeast Texas region, because the main interest of this grant was to identify the vulnerabilities of different sectors and kind of come up with recommendations. Why we look real estate and construction industry? Well, in previous paper, we analyzed oil and gas sector, which was very interesting to analyze. The two main pillars of Southeast Texas economy is oil and gas industry and construction and real estate. Texas Workforce Commission highlights that construction and real sector employs 12% in Hardin County, in Jefferson County more than 13% employees, and in Orange County more than 12%. So you can see the big impact, and they are interconnected with oil and gas industry. Oil and gas is doing well, plants are expanding, and there is more investment. Well, there is more people in the community, and they need residential properties, and small businesses are growing and having more impact. So first indicator that we looked is population. So what happened with Southeast Texas population? As you can see in Jefferson, Orange counties, and in general in Beaumont, Port Arthur, MSA, there was a population decline. Some part can be attributed to Hurricane Harvey and natural disaster, but in Harris County, which is constituted by Houston metropolitan area, there was some growth in population. Afterwards, we looked in different other indicators. Long-term population growth, Hardin, Harris, and Jefferson County, so growth in population. The majority of growth is in Harris County. There was a tremendous housing growth, and you can see that in Harris County there were more than 453,000 new properties developed. And if we contrast this with Hurricane Harvey and the impact, in Harris County there were more than 115,000 damaged properties, and in Jefferson County 66,000, which is huge economic loss for the region. The other problem that we identified was related with National Flood Insurance Program, and we kind of detected that not many properties have this insurance, and there was a big issue, and it's one of our concerns in this study. So, in one hand, we see a population growth. In other hand, we see a housing unit growth, and you can see in this maps. Then we have this huge natural disaster, a lot of properties damaged, and in contrast, you have a lot of properties that are uninsured, and it's a huge, significant problem. To tie and connect with economic development, let's see what happened with total employment after Hurricane Harvey. As you saw in the first slide, there was some population decline in Jefferson, Orange County, and Beaumont MSA. But if we look on total employment, you can see some growth in Hardin County. There is a growth in Harris and Jefferson counties, and in Orange counties too. So this is an indication that after Hurricane Harvey, the economy recovered, and it started to grow. If we try to look the per capita personal income, we see again in green indication that per capita personal income is growing. Some part of this growth can be attributed the recovery efforts and reconstruction, redevelopment of damaged properties, but also the expansion of oil and gas industry. And the other major indicator, as we saw, there is not a huge change of the population. We can look the real GDP in chain dollars for all four counties of Southeast Texas, and you can see that fundamental economy is growing, and there is a growth in all four counties. General conclusion that we came after this analysis is the economy of Southeast Texas recovered after natural disasters. This is a resilient region. You can see that there were employment growth, there were personal income growth, and also GDP growth. There were a damage to residential and commercial properties, but it was short-lived, and there was recovery. So Dr. Venta mentioned about our innovative methodology that we use to analyze the industries and sectors. After looking the economies, we kind of narrowed down our analysis and looked different industries. So we used this analysis method that we developed, and we need to give a credit to Dr. Meir Stimmer, a German researcher who developed participatory appraisal of competitive advantage, and we kind of adopted some components of that tool and created our own tool where we look the risk management. So this method helps us to come up with risk management practices of recovery and resiliency from natural disasters. And it helps to kind of figure out, give a diagnosis of challenges and past experiences that local stakeholders had during previous disasters or economic disruptions, and kind of figure out what was the losses and what are their best practices of risk management. In this particular case, we spent a lot of time with our researchers, specifically with Dr. Sladen. We visited many businesses in real estate, and we tried to understand what's going on there. So this method has different steps that we follow. We met in a team with Dr. Venta, Dr. Colon, and Dr. Sladen, and we came up with some questions that we're going to ask and collect information. Then we did a focus group workshops and kind of met with representatives of industries. Then we collected data and we kind of analyzed. And later on in the next stage, if we had more questions, we did a field work and get responses to the questions that we had. And at the end, we usually communicate with constituency through publications, through conferences, and right now we're kind of meeting and presenting results. So the first step, as I said, we met in College of Business. We kind of decided what we're going to analyze, what kind of data we need. And this approach tries to map the industry of particular economy that we're going to analyze. And in this case, we created the value chain of Southeast Texas real estate sector, how the value moves from one subcategory of industry to another. And we kind of mapped and detected the main stakeholders. So in real estate sector, we have planning of new development, then the investors and bankers, they put money and it goes to the next stage. The construction and developers, they are building properties. Later on in the last phases of value chain, brokers and property managers are kind of marketing and managing the properties. And final category in this value chain is property owners or tenants who are the final kind of customers. So we try to detect the main stakeholders of Southeast Texas in entire value chain, and we try to reach them, meet them, and speak them. There was a countless hours of interviews, and we also invited students to join us and met with people who are planning new development. We met people who are actually investors. We analyzed and met the construction issues. We met with brokers and property managers, and results were interesting. Then on top of this, we collected data of 176 flooded residential real properties in Bevel Oaks community, which is prone to floods. It flooded during Hurricane Harvey, it flooded during Imelda. We kind of tried to do evaluation and understand what happened there and kind of extrapolated results in entire Southeast Texas, and the results are quite interesting. Then real estate is not only residential properties, it's also commercial real estate properties. We had some relationship developed with real estate professionals, and we detected 45 flooded commercial real properties in Hardin, Jefferson, and Orange counties, and we kind of analyzed those properties and tried to understand what happened with their values. We did some regression analysis, and to not get into nuts and bolts, what I will do, I will just show the general picture to you. How we're doing in a time? We're good? Good? Yeah, okay, so I'll run a little bit faster. If we are looking on commercial properties, and as I mentioned, the economy recovered very fast after hurricane, you can see that there was a decline in values of those commercial properties that we analyzed. And that decline was reversed very quickly. And when we were speaking with investors and real estate professionals, their thoughts were, we can't afford staying and waiting long time until the insurance money will come, until we will be able to rebuild our properties after a couple of months. They just immediately found funds, and this tells about the resiliency of those commercial properties, and then they opened immediately, and then they started to operate. As you can see, there was a decline, but it reversed very quickly, and they continued to grow. There was another incident, which was in the during Imelda, and you can see a little bit decline after that also. Comparing with the residential properties, you can see here a sharp decline, and it was long-standing depreciation of the properties. And when we were talking and kind of doing our interviews, we detected that there were many homes that stayed after flooding unrecovered long time, and it's tragedy after natural disasters to have house in that shape, but that was the situation. If we kind of summarize and try to show the general impact of natural disasters in Southeast Texas economy, I can tell that economy recovered, GDP per capita recovered, the personal income is recovered, the commercial real estate properties recovered, and it generated more construction and economic growth. Residential properties, they recovered slowly, it took time, and we kind of came to those conclusions. We're expecting to publish this paper very soon. We're still, polishing and making some adjustments, and I will turn to Dr. Sladen if he has any comments, and kind of open floor for questions and comments. Thank you.
All right. One of the most interesting things is being able to find the data. So as you notice, sample size, but it's hard to be able to get the data to match up. And if you go back and notice one of the things the judges mentioned earlier when they were having their speech about flood insurance, when you're talking about a low is 8% in Hardin County have flood insurance. These people are getting wiped out. And as you notice, the recovery for businesses were so quick because for them it's investment to keep going. But for a homeowner, for them to come up with the wealth or get the money takes a lot of time. So it was a little bit harder for them to do it. So I don't know if we're going to see a big shift until a point is such as we know after the storms we've had hurricane that you might have to have windstorm, depending on where you live in Beaumont, which side of Interstate 10, you might have to have windstorm. Until we start seeing banks or somebody else require flood insurance for some of these, we might not see a change. So open the floor to questions and comments. Yes, Stephen?
I have a question at slide 17 and 18, just before.
Okay. That one and that one.
We will have the data for 2021 and the first 3 months of 2022, because
Yeah, it's probably gone up to the others, but remember, this is only for a small sample we find that you can prove flooding, that you can find the data to be able to put in the amount, square footage, match it up to make sure that it is, and that's part of the problem. That's why we did Bevel Oaks. We did our preliminary study for Bevel Oaks. We only ended up, after everything, only had where we could do regressions, we only had 48, and of course we've expanded it to over 100 and something, so you do have a limitation of getting that. But yeah, it has gone up from that as recovery, but of course we had Imelda hit and then it's come back. So
is it because the houses are not yet built, the new houses, right?
it depends. Like in Beaumont, there's not nearly as much new houses going up, but it's people going back and fixing the others and selling it. And actually some of the stuff that's more anecdotal, like in the Bevel Oaks, we found a lot of especially older people just moved out. Literally, they got flooded, they got their insurance check, sold the house as is, and moved to where their grandkids or something are, and just moved on. So there's a lot of people in that area that we had talked to, more anecdotal, we didn't do it, that actually just moved on. So the other people buying it are people moving in that want to remodel it. Some people had 2 stories. There are people 2 years later that still hadn't even recovered from Harvey yet to build back.
Cash the check.
Yeah. Well, some people cashed it and just moved on.
Something to add, Dr. Andre, to your comment. In a next presentation, we'll talk about COVID impacts, and we're going to work and look that part of the time frame. And it's interesting phenomenon what happened in real estate, and there was a lot of funds that flowed to Southeast Texas, and it kind of brought that. And the data that we collected for this time frame was back on 2020, right? And with student workers that we collected, we didn't have that information. But we're looking forward to get the data later stages of this real estate phenomenon and analyze through the second grant. Thank you.
If I can also add a comment.
Dr. Venta?
Can you hear me?
Excuse me.
Yeah. So remember that the object of this paper is to show what happened with Harvey. In this paper, we're not as interested in the true value of things as you go forward. So what we can show with these two graphs is that the recovery from Harvey occurred pretty quickly, was much quicker in the commercial scenario than it was in residential. But that's because commercials, as we stated in the presentation, they just can't sit around and wait. They have to get their business back up. So as a result, it worked faster. Whereas in residential properties, sometimes they lay there for a while until all of the insurances are paid and things like that before things can happen. So the object here is not so much to see what the residential and commercial values are today, but rather to show that it was a temporary issue associated with Harvey.
Yeah, we have the data that we kind of collected. Initially, there were 700 properties in Bevel Oak communities. We excluded those that were demolished. We excluded those that were not hit by a hurricane. And then there were 176 properties that were flooded. They are in the different value properties. There are properties that are around $50,000, and there are properties that are $300,000, $400,000 properties. So we can easily break it down through categories, but here our main goal was to see the average, what happened with the value. And here you see the mean of the slowdown, the decline and recovery. But yeah, we can break down. Go ahead.
The problem we have with stratifying it at such a small amount of sample is it's really hard to break it in to make statistical comparisons. Mm-hmm. When the original one we did, we ended up with 48 we were able to verify, and we eventually got it to 176. That's a fairly small sample size when you start 50,000. Some of them are 6 to 8 times as much value at 400,000. So when you start trying to break it into pieces of pie, you do 150 above or 150 below, it gets a little tougher to do it, and it's real hard to get the income stuff that matches up with it and matches them out, because some of the homes sold as is, some of them were remodeled and put up and came back, and so the homes sold closer to their pre-Harvey value, and some did not. So it's a little tough to go back and compare some of this stuff, because some of them that had to remodel, they were demolished. So in essence, they took everything down all the way to the foundation. They had to raise it, depending on the area, how many inches, up to like half before they could come back and build. So it makes it tough to go through and separate out. Unfortunately, it's a small sample size, but to go through, and that's where it makes it a little tough. We have looked at it and looked at the amount, but it's hard to compare between them.
So in the data, do you have the how many?
Not for our samples, but we do have for the area. Let me get it.
I believe it's in the 100.
Yes.
Yeah. Let me go
Jump
back
to the 7th slide. It's this.
There it is.
slide 7.
If you'll notice at the bottom, we had 8% in Hardin County. Harris County had 14, Jefferson 18, and 23 for Orange. So something that's going to be interesting as we go forward is how those numbers changed after Harvey, meaning did they jump up? And then what's really going to be interesting is, did people learn after Harvey and after Imelda happened, did they jump up again or not? Like I said, I have flood insurance and I live in Hardin County, and I didn't flood for either one of them, even come close to flooding, but I still have flood insurance. As a matter of fact, FEMA sent me my stuff just last week. So we're wondering how many people changed, but yeah, you see it's still a very, very small number had it.
Let me make one more comment here. This table does not show it, but our database in general, and that we've compiled, also has Galveston County. And what we saw was that the percentage of people with flood insurance in Galveston County was almost 46%, if I remember correctly. I don't have it in front of me, but it's much larger than in our area. But if you recall, earlier in that in the time period, Hurricane Ike had the huge wave that came in and destroyed a lot of Galveston and a lot of the Bolivar Peninsula. So as a result, lots of people in that area took heed and bought flood insurance, even though they might not have been required to do so, or they own their property free and clear. So what we're hoping here is that we can also replicate down the line how many people have flood insurance has increased as a result of the damage that they experienced.
When we were talking with, thank you, very good question, really good question. When we were talking and analyzing different investors and using those PAR methodology, average, they told that businesses recovered between a month to 3 months, and then it took from 6 to a year the other properties, and there are residential properties that are still unrecovered, and it took more than a year to recover. The general economic numbers, they are collected by governmental agencies and statistical agencies such as Bureau of Economic Analysis, and they are yearly indicators. So the economic recovery we can measure year after year, but in case of the real estate properties, we were able to narrow down and try to figure out, from those particular stakeholders how long it took.
So you're saying that you're gonna make it a paper, right, journal paper, so that if you indicate. Could be a huge real impact.
Thank you so much. Very good comment. Thank you, sir.
Right, this is only a portion, right? Real estate and construction is only a portion of our big study. What we found out is that each sector of the economy recovers at a quite different rate. So, for example, the oil and gas industry, because it is dominated in Southeast Texas by huge players, recovered quite quickly after Harvey. The education sector was really not affected dramatically by Harvey, even though those of us that work at Lamar think it was, but it was not. It was essentially a one semester issue with enrollment, and things came back out pretty quickly. I think when you deal with real estate, you have to differentiate between residential and commercial properties. Again, commercial properties recovered much more quickly.
One more last comment. When we were talking with the stakeholders and we're discussing that we're applying for the next grant to analyze the COVID and the impact of COVID and shutdown, what was very interesting and good to discover, many people that we interviewed, they mentioned, well, right now we have everything in cloud. We can conduct our operations online, and a lot of people, during COVID pandemic, they just immediately went online, because of the Imelda and Harvey and Rita hurricanes. They kind of get prepared to that situation when they're having this disruption, what they need to do. The same situation we observed when we analyzed the education sector and visited to LIT and other education institutions. We were all ready. Our Blackboard shells were ready for students to just immediately switch to online, virtual, and conduct. And I've seen those similarities in other industries also. They have their accounting systems. They have their everything is right now in cloud, and they can act very quickly from home.
Also, maybe it's the federal government also helping education and commercial sector.
asking for it and doing it, which means they had a flood event, to about 12% actually made it through and was able to get a loan. And you start ones that do that, well, you have your employees and stuff like that, that's their job, they do it, so they get their loans and they have a lot. But for residential, it drops down because people just feel overwhelmed, not sure what to do, process. And so I want to say, just off the top, it makes it tough. So for businesses, though, they recovered a lot quickly. So the big part of this one going with the others is we found out a big recovery for commercial. They recovered fairly fast. Residential is taking a while. Like I said,
They have the insurance and all the resources, right? So it's expected.
well, they do, but also for them, it's an investment. The longer they stay down, it's money lost. So they're willing to reinvest and go on if they think their business is good. But for somebody with a home, if you don't have a big cash reserve, you've got to wait till the check comes through or something happens or for you to move to the next one. So it's how it's treated. All right, we were going to move on if there's no more comments to presentation 2. Again, all the same players. I'm James Sladen, Gabor Sicilian, Ricardo Colon, and then Henry Venta is going to do that. This one is about COVID. So this is where we're extending a little. So COVID threat and opportunity for economic resilience, Southeast Texas. So how are people doing it? Because people had to completely change what's going on with COVID and all the stuff we've had with businesses going online. We know here at Lamar and education, everything else, so things have changed. And then of course the second part is risk management toolkits for Southeast Texas. So what we're going to do is talk about it. These are 2 EDA grants. The first one that we have by the EDA, it's a $491,000 grant that we've got approval right now. Everything is good. We're just still doing the technical legal stuff with the lawyers to make sure everything's signed for it to start this summer. So that's from this year, 2022 to 2024. So we appreciate all the support we've had from the EDA from the previous grant and this one going forward. Again, there'll be 4 faculty members. We're planning on using 5 students. Again, we're going to use our PARM methodology, comprehensive all the way around. Again, things from manufacturing, tourism, hospitality, education, everything we have going on. We're going to try to do our analysis to set this up. So this one right here is one that will be starting this year. Now, the other one that we have that's going with it is this is the toolkit, small, back it up. Okay. Well, the other one we have is a smaller, it's a $225,000 grant for Southeast Texas Regional Planning. We want to thank them, along with the EDA, that's developing for small and medium enterprises, developing a toolkit of all the things that we have. So Lamar, ours was $100,000. The overall grant was for $225,000. So it's developing a toolkit with a partnership with them, again through the EDA with Southeast Texas Regional Planning. There's 3 faculty members. Us 3 up here are in that. We're going to be using a couple students, and again, we will be using all of our methodology we have to go forward with it with the presentation. So, all right, do you want to go back to the disruption one? Okay. Well, we'll advance it for one here. All right. So with this, a major economic disruption obviously happened with COVID with everybody. So given that, again, the consequences with everything, and this also is going to allow us to extend our time frame. Now, realistically, there is going to be some contagion because we had Harvey, we had Imelda, we had COVID, again, as our original grant. So all this stuff is being hit. So people literally flooded with Harvey, then flooded with Imelda, then COVID shut down, and we've had a lot. So there's going to be a lot of effects, but we will be extending things such as a later date for real estate and all the effects we have. But we're going to go through and evaluate that. All right. Again, we have a couple of goals.
Mm-hmm.
All right.
Thank you, Dr. Sladen. So here we'll talk a little bit about what we're going to do. In the previous one, we discussed what we did. Here we'll kind of 360-degree overview of what is planned to do. Well, after natural disasters, COVID-19 pandemic caused another major economic disruption for Southeast Texas. If you remember, back on the day, oil prices went to the negative, and now they are up to the roof. So this is an interesting region, and it makes me laugh all the time. Very, very resilient region. So we want to investigate the consequences and the economic impact on industries of Southeast Texas related to COVID-19. We want to discover what kind of opportunities, well, there were threats, there were problems, what kind of opportunities this pandemic created for the businesses, because we can figure out some tragedies, but we also kind of can feel that there are some opportunities for the region. So what we will do, we will describe and enumerate in the first goal the vulnerabilities of Southeast Texas economy caused by COVID-19. So what we will do, we will re-examine the Southeast Texas economy. We will break it down into clusters and industries, and we will look into those industries. We will conduct a comprehensive cluster analysis and prepare a report, which will ultimately become a publication about Southeast Texas resiliency of COVID-19 pandemic. The second goal is to determine future growth strategies and business models and financial solutions that will aid to recovery of economic distress and disruption of COVID-19. So there are a lot of sectors that we still can look into, such as dining and hospitality industry, small and medium businesses, general tourism industry, healthcare, and kind of figure out what are the main threats and opportunities also. And we can develop some recovery guide about businesses and practical implications and how they can realistically move forward after these destructions and distresses. And the third last goal is to establish a virtual Southeast Texas Economic Development and Analysis Resource Center. For Harvey Grant, we didn't mention that we created web page and we created repository, and we have a lot of data there. We're going to do something more robust here, and what we will do, we will set the mission of that virtual economic development and analysis resource center. We will establish advisory board. We created some networking. We know a lot of people from oil and gas industry. We met a lot of people from real estate, education, healthcare industries, and Dr. Venta has strong connections in industries and serves in boards. Dr. Sladen is a long-time resident of Southeast Texas. Dr. Colon is CPA and has connections with that sector. So we're trying to bring those resources and create that board. And we will conduct a center-sponsored yearly panel forum, and most likely next year here with us you will have some industry representatives. That's what we're thinking to do, and we will use this resource center platform for the private and public discussions and to make some projections, and we will implement regional outreach through communications in this summit next year or in other conferences. The outcomes that we're expecting, the regional outreach and communications, we're in contact with Southeast Texas Regional Planning Commission, and we'll talk about that grant in a minute. We will do comprehensive cluster analysis, and that will be another document that we will put on the table. And we will create a recovery guide for the businesses that are practical, applicable, realistic for the sectors and industries. And the last one, as I said, we developed strong networking with industry, and we will have that advisory board that will kind of give us some real-world knowledge, and we can move forward. We will have the virtual Economic Development and Analysis Resource Center sponsored panel forums, and we will have a lot of resources there. So that's about our future plans for COVID grant. As Dr. Sladen mentioned, we worked in other grant in partnering with Southeast Texas Regional Planning Commission, and we created kind of a small business toolkit for small and medium businesses of Southeast Texas, and myself and Dr. Colon will discuss what we did and what achievements we have in that small grant. Why to look small and medium businesses? Well, when we were analyzing the major players and major 900-pound gorillas in Southeast Texas, those are refineries, those are plants and huge companies that are building roads and bridges and involved in construction, we came to know that there are more than 27 million small and medium enterprises in Texas. They are contributing more than $900 billion as a gross economic output, which is huge. They employ more than 45% of employees of Southeast Texas workforce. They generate more than 13 billion state tax revenue, and this is 2018 data, and 14 billion federal tax revenue. So we realized that these small businesses, they are small, but there are many, and their contribution is huge, and that's why we decided to focus on small and medium enterprises. So first part that I will discuss, we developed this self-evaluation toolkit that small and medium businesses can use to analyze their vulnerabilities and issues. And then Dr. Colon will talk about best practices and some hints for recovery, which is a fantastic guide for small and medium businesses. So I put this in very compressed way to just give you idea. In reality, this is a very comprehensive document, and if small business wants to understand where their vulnerabilities come, they don't have many much resources to focus on consultants, to hire consultants, and they don't have many executives. They can just use this tool to kind of detect their issues and respond. So we used a Harvard Business School techniques and tools, and I need to give a credit to Harvard professors Kaplan and North and to their balanced scorecard, and also some other tools that we used to create this self-evaluation toolkit, and it has different parts. So this toolkit has 5 parts, and each part is broken into dimensions. The first part is a customer dimension. The second one is production dimension. Third part is looking the HRs and financial dimension. We want small and medium businesses to understand what was the vulnerabilities and issues with customers. They were satisfied or not satisfied. What happened with their production and operations? There were some disruption related to suppliers or not, and kind of respond. They had issues to hire people or not. They had revenues decreased or costs increased, or project profit margin declined due to natural disasters and other issues or not. The next part is the overall investment attitude. If they are dealing with these issues, do they plan to expand and do new investment, and kind of they mark their investment plans, and with those dimensions they move forward. And in the third part, there are general information to obtain and use financial resources. How accessible were finances for them? Did they get financial resources? Did they give some extensions to pay back after natural disasters or not? The next part, the fourth part, is related to risk preparedness, handling the situation, and also the recovery stage. And we're putting together multiple questions that people can sit, just scratch their head, ask those questions, respond, have that comprehensive report generated. And finally, the last 2 parts, what was the technology's role? As we know, during natural disasters, flooding, we're working remotely. During pandemic, we worked long time remotely, so we want to see what is the impact of technology. And I can see Dr. Andre is smiling there in computer science. So thank you for your resources. We're able to, survive these disruptions. And the last part is the government action. Dr. Venta had a very interesting approach when we interviewed people. He would go and ask, what is your wish list from the government? What projects and financing you expect to recover? And I will pass to Dr. Sladen, and he will talk about his best practices and hints, risk preparedness guide that he created. Dr. Colon, please.
So as part of the grant, we created best practices and hints for risk preparedness. The main point here is that when you have a disaster, you need to prepare for that disaster. Things that you can do. Identify the impact of a disaster on your business, assess the timing and duration of the impact, determine the operational impact, and quantify the operational impact in financial terms. Things that you are going to consider while doing a business impact analysis: the loss of staff, cash flow issues, customer dissatisfaction or defection, loss of sales and income, delayed sales and income, increased expenses. Many businesses don't realize that when you have a disaster, your expenses are going to go up, especially if you have overtime labor. Disruptions to supply chain, those are really important. Contractual penalties, delay of new business plans. Accidents may happen, incurring fires, explosions, utility outages, mechanical breakdowns, natural hazards, and cybersecurity incidents. Something to be aware is that during emergency, cybersecurity incidents increase dramatically. So you need to be ready to react, in addition to the emergency, to a cybersecurity incident that may occur at the same time of the emergency. Another tool that we identified was the asset vulnerabilities and threats analysis. First, you identify your assets. An asset is anything that you have that is valuable to your business. Examples: your workforce, your buildings, your information, including customer records, your equipment, servers and computers, specialized equipment, your inventory and your supply chain. Then you identify your assets vulnerabilities. Location is key. You need to know whether the location where your assets are located has any particular hazards, whether you have all the equipment that is prone to failure, whether your business is located in a low-lying area prone to floods, where your business is located in a coastal high hazard area. Then you identify threats. What happens if you're without power or utilities for hours, days, or weeks? Can a flood damage your equipment? Can a hacker access your data after a disaster? Can the organization be exposed to lawsuits or sources of legal liability? Other hints that you can take on preparing for a disaster: preparation. You need to have an emergency plan, a business continuity plan. Undertake operations planning measures. Look at alternate sites, and also look for the help of experts that may allow you to assess any particular risk regarding your location. Pre-plan communication channels. Social media is extremely important as you try to communicate with your stakeholders. Train, test, and exercise. You should be conducting a drill at least once a year. That drill should be either part of your emergency plan or the entire emergency plan. Review insurance coverage and create inventory and reserves. A good idea is to take pictures of your assets, inventory, machinery, and equipment, or take a video recording of your premises prior to disaster, and you can use that to document losses with your insurance company. And consider structural and non-structural mitigation activities. For example, raising your equipment, anchoring your equipment. You can do dry proofing, which is doing structural redesign to prevent flood waters from entering the business. So those are basically the best practices that we identified that can help businesses minimize losses during a disaster and during a flood.
The overall idea of this toolkit is to have something providing that is an easy resource for people to actually use and make a decision, because people really have no idea what to do. So there's anecdotal evidence from what we've talked. Again, remember, we've had these disasters just one after another, but The flooding that people hit with Hurricane Harvey, people had no earthly idea what they need to do, who they contact, all the things they have. But the people we talked to that got flooded again in Imelda were a lot quicker because they knew who to call, they knew what they needed to do, they know what information they had. In essence, they almost became an expert in disaster from flooding because they had it. So this is to provide, who do you even contact? It's one of those things you don't think about. When I moved back to the area, one of the real estate agents that I was using gave me a list of, these are the people you need to call to turn on for your cable, for your electricity, for your water, all the stuff you need to do, and it helps move on. Well, the toolkit is something similar to that. So we only have a few minutes left, but are there questions or comments? No, we only have 3 minutes.
Smiling because I like how you
Well, somebody needs to come up here to move, so yeah, we're. Yeah.
So for the risk assessment toolkit, what is the
In the reality. So it is a very comprehensive document, more than 20 pages, and it has a score from 0 to 5. And small business doesn't have opportunity to hire consultant to do that work for them. They don't have managers who can run that. So they are going and they are checking list. Okay, what happened with my return on equity? What happened with my hiring issues? And kind of they're putting impacted drastically, impacted less, and kind of quantifies. Then they get a score at the end, the comprehensive score at each dimension. And based on that, they can see, oh, I need to figure out how to hire people, or I need to figure out how to manage my assets well. It will kind of show the red areas, raise red tags, to focus on this dimension and not on the other dimension. Perhaps some businesses need to focus more on customer dimension than in financial dimension. Maybe they need to focus on their assets or other.
analysis for that?
Yes.
In order to make the improvement
Yes.
for the
Think of it as a rubric scorecard. They'll simply go through and mark about all their stuff, and then they get a score and say, okay, well, I have a problem with inventory, but you do have employees. So I'll use an example we had for the previous grant for some refineries. One refinery had no problem. Refineries they could pull from to bring in people and had no issue at all. The other one had a lot of problem getting in new workers because they got to have their demo extremely hard. So for one, no problem at all for employees. The other one, it was extreme problem, and that's two refineries very.
Yes, very good choice. Thank you so much. For small and medium businesses, we need to do that. When Dr. Sladen was talking about, refineries, we have refinery A and refinery B. We can easily compare. One had issues with employees, another had issues with communication. But small businesses are many, and there are many issues. And this self-assessment toolkit will allow them to detect their issues and kind of comprise data and break it down by categories. And when we expect to have a lot of brackets of small and medium businesses, multiple industries, multiple number of employees, the financial size of the company.
continuing his question, clarification.
Small businesses, small and medium businesses category is 0 to 300 people, employees. The very, very small micro companies are those that are self-employed. You know, it's mom and dad and kids are working together and they don't have anybody in payroll, or they have 4 or 5 people, and it goes up to 25, 30 people. And then there's the medium business category, which goes up to 300 and a little bit above that bracket, that category. So we kind of broke down. There's also micro businesses that somebody just drives a truck and gives the services, and he is his own employee.
So it's a conversion to mathematics, not to, I thought small means you just do.
It's a function of number of employees, revenues, facilities, total assets. So it's a categorized. It's a function of their resources and financial variables.
Yeah, I would like to make a comment about the
Actually driving around for that. So there's a lot of stuff that's been done in the previous one and this one, that it is, a lot of the stuff is applicable, that you can take it from many different places. So all the other stuff, we stretch and do as much as we can, and we're trying to divide it, but time is always at a precious commodity we don't have enough of. So, well, we thank you. I know we've gone over by a couple of minutes into Stefan.